The central banks, they've been orchestrating rallies off of short squeezes since, early 2009. You can make a case from the low of 2009 when the S&P 500 traded at 666 on March 6th, that was an orchestrated, reversal, massive short squeeze. So, these guys know that this is the name of the game. It can't stop either. There is no other remedy.
The Financial Survival Network. Now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm your host, Kerry Lutz. It's 1/8/24, and I don't even know what show number it is. Let's check that out here. Crap, I forgot about that. And this is show number 553. Nick, hey, it's been a little while. We've both been on vacation, family, and all that good stuff. Now the year has started. We're hitting the ground running. So we're going to do basically your insights into 2024. First, let's just do our standard market reviews. What's the market doing today?
Yeah, we got a mixed session today. Technology is actually getting a bid. That's been weak recently. You have NVIDIA trading higher. That's up over $500. So everybody's talking about that today. AI back in the main scene of things. But overall, since the new year's begun, we've gotten a little bit of a pullback from that very, very overbought position that we had going into the end of the year. And that was a big short squeeze there. And I think that short squeeze now has to remedy itself. And you'll start to see the markets chop around here for a little bit. But ultimately, I don't really see anything problematic yet, at least for the markets right now.
Well, they say Santa Claus only comes once a year, and we had quite a Santa Claus rally, didn't we? I mean, almost from the moment they put up the Christmas lights.
Yes, Jay Powell decided to put on a Santa suit this year. He's a little bit thin, but it worked out nonetheless. The Powell pivot did the trick. And, nobody expected that. I didn't expect that myself. I thought he would talk hawkish because he really had things in control with the 2-year Treasury note yield falling below the Fed funds rate. But, I think it was December 12th, December 13th when he came out with that decision. And it really gave us another big rocket ship boost to the upside. And, now the markets are just trying to work that off a little bit. We have earnings season starting up in the next couple of weeks. So that'll be pretty important as well. We'll start to get some numbers from some of these companies and see how things truly fared. You never know how the market is when it gets euphoric like it did off the Powell pivot.
Yeah, well, that Powell pivot we're going to talk more about. As far as sectors, now remember, we saw housing stocks hit that new high. I think it was December 1. They hit the all-time high. All the major housing stocks, whether it's Toll Brothers, KB, Lennar, right around that same time, within a 2-3 day time period, they all hit that high. And that was kind of the giveaway that somebody knew something, right?
That's right. The housing stocks were not going down. They were acting really, really well. They were moving up. And somebody always knows something in this business. It's just not us, but somebody always knows something. We have to look at the charts and try to find the patterns. And, that's how we go about our business. But somebody always knows something. And, it would really was, the market moves on surprises, whether it's to the upside or the downside. When the market doesn't have something calculated in and you get a big move, that it was a surprise. And that really was a shocker to see him lower his rate outlook after being so hawkish for so long. All of a sudden, 2 weeks ago or 2 weeks prior to that announcement, he's very, very hawkish, and here he comes in as the dove of all doves. And, we've seen him do this before. He actually did it in December of 2018, and it was we call the Christmas reversal. I think it was on the 26th of December. We're going to lower the Fed funds rate back down to zero. We're going to start a quantitative easing. Remember that? And the market just ramped up for 2 years. So, you just got to be aware of how the Fed operates. They jawbone a lot. And then when they can't actually jawbone, it seems like they really do take action, and that gives them another, another market move in the direction of their favor.
Yeah, I just find the whole thing kind of fascinating because look, historically, 5% interest rates, that's what we've had, right? That
That's
is
right.
the number. And, 5% mortgages, whatever. And now the economy can't even sustain the historic normalized interest rates for very long. The economies can't. The economies of the world were just falling to pieces. And I don't think it was something that Powell did lightly. I think it's something he had no choice but to do, because how many more banks could collapse before something had to happen here, Nick?
Yeah, absolutely. And we've had an inverted yield curve for well over a year now between the 2-year note and the 10-year note. So that's always been a great indicator of a recession throughout history. And, a lot of people are now looking for 2024 to have, let's see if we have a recession this year. So it's certainly a possibility. But again, the central banks, they've been orchestrating rallies off of short squeezes since, early 2009. You can make a case from the low of 2009 when the S&P 500 traded at 666 on March 6th, that was an orchestrated, reversal, massive short squeeze. So, these guys know that this is the name of the game. It can't stop either. There is no other remedy. You either let the markets go down, then you squeeze them up, and you just keep playing this game as long as you can. But we've already crossed the Rubicon, Kerry, with $34 trillion worth of debt. So, enjoy the rallies when you get them, I guess. And, you go about your business that way.
Yeah. Hey, actually, the first time I remember them directly interceding in the markets was 1987. The crash of 1987 happened on a Friday, and basically on Monday, all the markets had seized up except the Kansas City futures market. And the Fed started massive buying on that market, and all of a sudden, everything opened up and jolted ahead, and we saw these huge advances. And from that point on, the market's never been allowed to actually engage in its cleansing action. Arguably, we had that recession during Obama, and they let the market go down, but only to a certain point, and then they were back in there manipulating the hell out of it.
That's right. And, there's an old wives' tale out there that Ronald Reagan signed an executive order after the 87 crash and created a working team to never let the markets, fall that much. Now, we don't know how true that is, if it's really something, but I believe they did do a working group, and they do have a working group out there. But, you don't even have to follow that so much. You just follow really what the Fed is going to do, and you follow charts, and all the chart rules still work as good as they've ever worked. And this has been going on for years and years. And that's why I use them. And I tell everybody, just learn the charts. If you're not going to always nail it to the day or pinpoint things perfectly, sometimes you do. But, you'll have a good understanding of how the markets work and how they actually move, especially when you get all this rhetoric coming out of, central bankers almost on a daily basis.
Hey, that was the birth of the good old PPT, the plunge protection team.
That's right.
I haven't seen anybody make any mention of the PPT for years now, because it's so normalized that, I don't want to say it's transparent, but it's transparently obvious.
That's right. It has. And that's like everything, Kerry. When they implement something, if they implement it long enough, it just becomes normalized, like you just said. And that's exactly where we are, where people don't even mention the PPT, the plunge protection team, any longer.
All right, quickly, energy and precious metals. Where is it? Where did we start the year at? Where is it now?
Well, crude oil, actually, we'll start with energy and oil. Crude oil actually tried to make a move, and oil got to around $75 a barrel. It just really can't get anything going. I actually own the USO at the dead low, so I'm still in the money there, but I have a break-even stop on my second half position. It's been a tough trade. And like I said, Kerry, if we take out the lows that were made, not that long ago in oil, we're going to see oil go down to $55 a barrel. So I know that's hard to believe with all the conflicts going on around in the world, But even today, we had Saudi Arabia basically come out and say that they're going to lower oil prices around the globe. And just right before the holidays, we had an OPEC meeting where these same guys wanted to do production cuts. So they speak out of both sides of their mouth. They've actually learned from the Federal Reserve. They've learned the playbook.
From the master. They learned from the masters of double speak.
They have. They really have. And they are good at it. So now all of a sudden today, the headline is that, Saudi Arabia is going to lower oil prices around the world. You just can't make this stuff up. And this is why, I always tell my traders, I said, hey, we already made money on this trade. We take half off the table and we just sit with the second half at with a break-even stop and play with the house's money, because it just gets to be, right. One day to the next, you just get so much rhetoric from these different groups.
Okay, so oil, what's oil? We've got energy. Nat gas is still trading at the lows, huh?
Yeah, nat gas had a good little run. It tried to make a run at 3. Now it's backing off again. It's been a lot of whipsaws. So that tells me probably somewhat of a manipulated market here for nat gas. But that's with everything. So, after you have a 7-8 month run up, you're going to get a pullback of some sort. I think that pullback has already occurred. I'm looking for a bottom in nat gas. I pulled my nat gas trade off the table a while ago, again with a break-even stop, and made a little profit there. But I'm looking to get back in it. I do think it's headed higher. I think it's still the energy that the world needs. But supposedly these controllers don't believe it. So we'll see how it plays out. But the chart is going to be important for nat gas. But today it's having a sell-off, and it's been very volatile, and that's the problem with it. You have 5% moves almost on a daily basis.
Okay, so and then all right. So what about Bitcoin and gold and silver?
All right, we'll go to Bitcoin next because everybody's waiting for this approval of a spot Bitcoin ETF. I think that's going to help a little bit. I think the move in Bitcoin has probably been made for the most part, or it's factored into the cake already with the big run up that it's had into these spot Bitcoin ETFs. If these things don't get approved, I mean, Bitcoin is going to sink like a ship. So that's where we are. I don't know what's going to happen. Honestly, it's in the SEC's court. The courts kicked it back to the SEC. So we'll see what happens here as we go forward. But, it's very, very important that they get that approval. If they don't get that approval, I mean, it could be, the end of Bitcoin as we know it.
That will be interesting to see. And today Bitcoin crossed 45,000. And it looks like the market seems to think these ETFs are going to be a fait accompli. But we will see. One thing I've learned is never count on the government or the courts to bail you out or to provide you with a windfall. If you get one anyway, that's okay. But don't think they're going to save you. Hey, so precious metals, we're still over 2,000 in gold, but taking a little bit of a hit this week.
Yeah, gold had a great run, and it's been flirting with that breakout, Kerry. There's a big trend line going on a monthly chart of gold futures, and we have not been able to close above there. And that's a real big problem at the moment. Now, eventually, I believe it's going to close above there and go a lot higher. But in the near term, we're doing a lot of backing and filling. So you still got to be careful with gold here. I love it longer term. In the short run, I'm just sitting and waiting to trade levels. I haven't done anything really in the space because it just hasn't given me a confirmation of a breakout, and it might trade a little bit lower in the near term. So I don't know what to do here. When I don't know, I don't do, and I just sit back and wait. But if gold goes into a real correction type move, we could see it trade down to the mid to high 1,600 handle, which I believe is a golden goose buying opportunity, and I would be all over it at that stage of the game. No guarantees it's going to get down that far, but again, it has not broken out, and I would not chase it right now.
Hey, and of course, silver has not participated at all here.
Yeah, silver is lagging gold right now, and we've seen last year or the year before we've seen silver take leadership. This time around, it's lagging. It is not keeping up with gold. So keep an eye on that. I love the silver formation, though, what it's doing. A lot of traders are looking at silver saying, it's not going to make a move. But I think silver's got to pull back in its cards here, and that's going to be a setup to get long. And a level I really like, and I'm going to give it to you guys here. I gave it to my members over the weekend, is $19 on silver futures. It might be a slight pierce, maybe 1880, 1875. But if you get silver down to 19, I will be loading the boat once more. And I already got a boat loaded of stuff, Kerry. So I will be loading up once again around that level. And I think that's, if you missed it at 1740 when I gave the call there in September of 2022, this is your chance to get into silver. 19 bucks is the next load up phase. Okay.
All right. Sounds good. Now let's talk about 2024 and beyond. I always think about, when I'm thinking about the future, I always think about what Eisenhower said when he was president. And he said something to the effect of, things are more like they are now than they've ever been before.
Well, I'm going to stick with that saying myself. They really are. And I know a lot of people are going into the new year thinking we're going to have a crash. And, I'm not in that camp. I think the market will chop around. You have an election year this year. So, you're going to get some volatility just on that basis, I would expect. But overall, what I'm seeing for the year is that this market is just going to be a choppy grind. And if you don't, you're going to have to watch chart patterns. You're going to have to be a chartist. And again, if the central banks do come out and do rate cuts, that's always a positive, and markets can go higher. So I'm not an uber bear this year at all. I think that the Fed is still driving the ship, and Jay Powell is still in charge, sitting at the captain's seat right now.
All right. So gold, what are your feelings about gold for the year?
Well, I really think that gold right now is a little bit of a tough trade. If we cross that 2100 and we do it on a monthly closing basis, gold's off to the races. If we stay underneath that 2100, we could go back as low as 1675, 1680, and that would be the level to get in. And I mean, get in for the long haul. Get in and don't look to get out for years to come. That's my take on it. Because when gold does break out, we're going to see it probably go 28, 2900. That's what the symmetry of the pattern shows. That's where we would go, maybe even test 3,000. I'm not in the camp that I hear so many people say gold's going to 10, 20, 30,000. I don't see that. But, a move to 3,000, move to 2,800, 2,900 certainly is possible. But you got to cross that 2,100 level on a monthly closing basis. You do that, that's where we're headed, and we'll probably get there pretty quickly.
Okay. So as far as stocks go, so like you said, it's going to be a grind. Any sectors you see that are probably better than others?
Yeah. So right now you've had a big tech run. Tech needs to correct itself. So you kind of stay away from that for the first half of the year. There will be tech stocks, maybe some certain names that will do better than others in the near term. But for the whole, you stay away from tech at least until late April or even into June perhaps. And then you start to look at tech. Tech could be a second half runner. But the first half, tech's got to work off that ridiculous gain that it had last year. I mean, the NASDAQ was up 44%. So you got to work that off. You don't look at technologies. You know what you look at now? You look at companies that were beaten down last year. Believe it or not, I like Bristol Myers, right? That stock was 80, closed down at around $50 last year. That's something I'm in call options with. I'm looking to be a buyer of it. You look at other stocks, even Walgreens, which I don't like the company at all. They just cut their dividend. Stock looks horrible, but it's a dog of the Dow. So you look at something like that. I also like a lot of the Proctors and Kimberly-Clarks. I think those could firm up. They're not there right now, but that's a group or an area of the consumer goods names that I would look at as well. They need to play some catch up. And then you could look at small caps after a pullback of some sort, but they had too big of a run into the end of the year. So I would stay away from them until they give us a really good level. And we could see like a 30 to 50% retrace before that occurs. So, you look for pattern setups now, but I would avoid tech for the first half of the year for the most part.
Hey, Walgreens, going back to that had a high yield. It hasn't been doing well, and then they cut it, which I guess was widely anticipated. Now it's down to a 4% yield, and I guess the stock's kind of finding its way, huh?
Yeah, it's trying to find a bottom. I don't like the company at all. I think it's horribly run. I think the chart has been bearish for years and years. But, you got a dog of a Dow theory there, right? Dogs of the Dow usually play out. At least they're, something that could catch up and do a little bit better. And, just like Intel was last year, right? Intel was a dog of the Dow last year. Intel had a really good run in recently. So, again, in 2023. So you look for things like that the first half of the first few months of this year. I wouldn't be putting money to work in these high-flying tech names. I think that should be avoided at all costs. And again, sometimes they defy gravity and they go higher than anybody expects. But I would never chase them up here after the run that we've seen like last year.
Okay, so all right. So we talked about housing, but what do you see about housing for the coming year? Because we do have this shortage of housing. All right. Now, obviously, all you need to cure a shortage of housing is a lot of people looking to sell and more people looking to sell than to buy. But this looks like it's almost a systemic issue here.
Well, you got to remember, Kerry, we had a lot of big firms out there, whether it was subsidiaries of Blackstone or BlackRock. They've all bought, houses. I can't tell you how many people I know that sold their home and are renting from the same people that they sold the house to. It's an incredible phenomenon. We've never seen this in our lifetime. So, that has taken a lot of supply off the market. And when you don't have supply, prices stay high. So I'm not looking for any dramatic drop in housing unless interest rates really go through the roof. And interest rates went from basically nothing to 5%, and the mortgage rates went up to 8% almost, and housing prices still held up. So, right now it's all about supply and demand, and there's very, very little supply out there. So, I think housing can pull in a little bit, but I don't see it going down significantly.
All right. So housing is more of the same, like we kind of said there.
Yep, it is, and I think that's how it's going to be this year. You'll get some pullbacks, like always, in the housing stocks. But, keep an eye on companies like Lennar. That's really probably the tell of what housing does overall. I think that's the most important. That's like the JP Morgan of the housing stocks. So watch that one. Stock's still holding up really well right now.
Yeah, which is like exactly what you wouldn't think. But hey, I guess it all goes back to the Powell pivot. So originally Powell said 3 interest rate cuts. The market turned that into 6. How many cuts do you think we're going to get for the coming year? Will we get any?
I think if we do get cuts, it'll just be 2. I don't even think we're going to get 3 because you have wars going on. Wars are inflationary. So Powell, everybody thinks the Fed is really stupid because they play dumb. But these guys are not stupid. They're very smart. They have a big team over there, MBAs, PhDs, mathematicians, statisticians. I've said this a million times. They're not stupid. They know that interest rates are not going down that much, even regardless of what they do. There's a floor under the 10-year Treasury note yield. So, where could it go? 3.7, 3.5%? That's it. It's not going down any lower than that. And if you get any invasion of Taiwan, China going into Taiwan or something along those lines, now you got supply chain disruptions. That's as inflationary as it gets. So they have to be aware of this. I just don't really see how they're going to cut rates. I'm going to give them 2 rate cuts because they said they're going to do 3. And the market's looking for more, but the market's always greedy, right? The market's always looking for way more than what they are going to get, right? The market's always it's like a dog begging for a treat. So you have to think of it like that, right? When you're walking a dog's always looking for a treat. He'll stop and give you the paw and all of that stuff. You may even roll around. Well, that's what the market is. The market's like a dog looking for a treat. They're always looking for free money. So I just don't see how it's going to happen. If China does go into Taiwan, hey, the ball game changes, and everybody better be aware of that.
Yeah, I personally don't think it's going to happen because the CCP is in real trouble right now. crisis of leadership. Xi looks like he's, not long for the party. If he does manage to hold on, the problem is, in order for them to invade Taiwan, he's got to appoint somebody the head of the military, all the branches in China. That person then becomes the most powerful person in China, and that could well be what's held it back. Plus, there's a question about, can they really win, right?
Well, I think they could win. I think that wouldn't be a problem. The same way I think Russia could win Ukraine. I don't think that's a problem either. The problem is,
what
right,
cost?
At what cost does it come? And that's what they're up against. But basically, we get news reports saying that President Xi has already told President Biden that at some point he is going into Taiwan this year. So, is that just more rhetoric? Will they do it? It remains to be seen. I don't know that stuff. I don't know if they will or they won't. But what I will say, if they do, watch for inflation. There's no way to counter that.
Yeah. Well, probably a huge mistake to go in there, but hey, leaders have done things when they're desperate before, and that have surprised the world. So, hey, it's just the tofu dreg world economy here at work.
That's what we're going to call it.
All right. What about wars? More wars on the way, because we're talking about wars. What's happening with the wars that are going on now, and what can we look forward to?
Yeah, more wars are on the way for the next 6, 7, 8 years. Who knows? It's the war cycles are all in place now. I mean, they all have kicked into gear, so you're going to see conflicts continue. 2024, hopefully we can avoid some of it, maybe even get a wind down in Russia and Ukraine. That's a possibility, but others are going to flare up. It's not going to end. You could even start to see, with the election, you could even start to see a minor civil war here in the U.S. I mean, all of these things are in play right now. I'd be very, very much aware of war sticking around for the next several years.
All right. So, yeah, even had Venezuela said they were going to go into Guyana and take their oil fields, right?
Yep, that's right. That's right. And then, watch another, people aren't realizing, but India has been the hottest economy in the world. If they have problems with Pakistan, that's a problem as well. So keep an eye on that as well. I mean, but perfect example, Venezuela. Who would have expected that? Nobody expected to hear that, right?
That's crazy, right?
It is, and we're in a crazy time, Kerry. This is an upside down world, and all of these things are not going away anytime soon.
So true. So true. So we got interesting times ahead, that's for sure, right?
Without a doubt. And it's the chaos is going to continue. We are, and we haven't even spoken about the election yet. That could be chaos as well. So.
Yeah, well, it seems like it's getting off on a good foot there, huh?
Oh yeah. We are looking at, I like to call it the actors, right? We're looking at all. I think all these politicians are actors. In fact, I think they all have Actors Guild cards. So we'll see what kind of show they put on for us.
Yeah, well, it's definitely going to be interesting, isn't it?
It's going to be more than interesting. This is one for the ages. Nothing's going to change. It doesn't matter who really gets in. They're all kind of the same, right? But the show is just going to be outstanding. It'll outdo the Hamilton that everybody liked in New York City.
All right. Well, that is it for today. Make sure you go over to Nick's site, inthemoneystocks.com. See how he's beaten the averages for decades, and we'll see if his prophecies for the coming year are accurate like they have been in the past. If you got a question for Nick, myself, email address kl@kerrylutz.com. Make sure you write your comments in the YouTube channel below if you're watching this on YouTube, and like, share, and subscribe, and all that good stuff. Nick, we'll talk to you on Wednesday. Thanks for stopping by.
Thank you, Kerry. See you on Wednesday.